the world once again finds itself on the threshold of a new escalation in trade confrontation. This time, it is not about rare earth metals, not about chips, and not about smartphones. The matter is much deeper and more painful. It is about gold, the symbol of wealth, the backbone of the economy, and a measure of trust in the state. Several influential outlets, including the Financial Times, Caixin, and Nikkei Asia, have published reports stating that China is preparing a new package of restrictions against the United States. And whereas sanctions previously targeted steel, aluminum, and semiconductors, Beijing now intends to strike at one of the most vulnerable points of the American economy, the gold industry. According to sources close to China's Ministry of Commerce, in the coming weeks, a list of measures may be released, including a sharp increase in tariffs on any American gold, from raw material and bullion to finished jewelry, and, in the extreme scenario, a full ban on gold imports from the United States. At first glance, this looks like just another round of the trade war, but in reality, it is about something much bigger. According to Bloomberg, China has begun forming an international coalition of countries that are among the largest holders of U.S. gold reserves and partners in refining. The goal is to begin the process of withdrawing American reserves from overseas vaults and gradually exclude the United States from the global gold storage system. Experts are already calling this a golden decoupling, a step that could undermine not only the gold market, but the entire financial architecture that Washington has built over decades. This is a blow not just to the dollar, but to trust in the American economy as a whole. It is important to understand, this is not just about bullion in bank vaults. A strike on gold will hit the entire industry, from mining operations in Nevada and Alaska to jewelry companies in New York and Los Angeles. American gold has traditionally held a significant place on the market. Its share in global production is about 6%, and the United States has always positioned itself as a guarantor of transparency and reliability in this field. But now, everything may change. Gold mining is a heavy, exhausting process. Enormous open-pit mines where haul trucks weighing hundreds of tons lift ore from the depths of the earth. Whole settlements of workers who live for months far from civilization. Complex chemical refining processes where only a few grams of pure metal are extracted from a ton of ore. Every ounce of gold in the United States is the result of the colossal efforts of thousands of people. And now, all that labor is under threat. According to analysts at Bank of America, the introduction of Chinese tariffs of several dozen percent will collapse exports and hit hundreds of thousands of jobs. Already, the shares of the largest American gold mining companies, Newmont, Barrick Gold USA, and Freeport-McMoRan, have begun to fall on rumors of the upcoming measures. Goldman Sachs warns, if China carries through with its plan, the global price of gold will soar, but it will be the United States that is left out of that growth. For Donald Trump, who has returned to the White House under the slogan, "Make America Rich Again," this could become a political catastrophe. Gold has always played the role of a safe haven for American investors. Now that haven risks turning into an isolated port. In Beijing, they fully understand the symbolism of what is happening. According to insiders, the Chinese delegation is already in talks with Switzerland, the UAE, and even South Africa to create an alternative system of gold storage and refining without U.S. participation. Several diplomatic sources at the United Nations confirmed to Reuters that the possibility of gradually pushing American banks out of international gold clearing is being discussed. And this is no longer theory. In July, the share of yuan settlements in gold transactions on the Shanghai Exchange exceeded 40% for the first time. This is a worrying signal for Washington. The reaction in the United States was predictably sharp. A White House representative stated that any attempts to restrict America's access to the global gold market would be regarded as financial aggression. Donald Trump himself wrote on Truth Social, "China cannot dictate to America what to do with our gold. If they try, we will strike harder than ever." Yet behind the loud declarations lies panic. The American economy is far too dependent on trust in the dollar, and gold has always been its pillar. If that pillar is knocked out, the entire U.S. financial system will be at risk. And this is understood not only in Washington. European analysts at Deutsche Welle are already writing about a possible gold blockade, which could lead to a reassessment of the entire global reserve system. In London, the gold exchange is recording a surge in demand for yuan-denominated contracts. In Dubai, they speak of shifting part of transactions into cryptocurrency. And all of this is happening against the backdrop of China's mounting pressure. The question now is only one. Will this attack on gold become the point of no return in the US-China trade war? Many experts believe it will. The Brookings Institution stated outright, if China closes its doors to American gold, it will be a signal for the start of a new financial Cold War. For the global economy, this means instability, rising prices, flight into alternative currencies, and radical changes in the structure of trade. For the United States, it will be a blow to the very heart of trust in its financial system. And the most troubling part is, this is only the beginning. Insiders are confident that after gold, China may turn to other sectors: oil, gas, technology, pharmaceuticals. The scale of the looming trade war could surpass anything the world has seen before. And while it once seemed that this was merely a matter of temporary tariffs and negotiations, it is now becoming clear we are entering an era of global economic fracture. America and China are heading toward open financial confrontation, and gold may become the first stone that triggers the avalanche. If the scenario described today by major outlets and authoritative insiders comes true, the world faces a tectonic shift. Gold has always been more than just a metal. It has been the foundation of trust. All the world's major currencies, the dollar, the euro, the pound, the yen, have, in one way or another, relied on gold reserves. The loss of US control over this sector would be a blow not only to its own economy, but also to the entire Bretton Woods system created after the Second World War. Washington understands this, but its room for maneuver is limited. Pressure on allies can only deliver a temporary effect. Europe is already showing caution, the Middle East is drifting toward China, and Latin America is openly considering a switch to yuan settlements. If this process gains momentum, the dollar could, for the first time in 80 years, lose its status as the unquestioned global anchor. This would trigger a chain reaction. Investors will begin seeking new safe havens. Some will move into central bank digital currencies, some into the yuan, others into cryptocurrencies. Already today, according to CoinDesk, interest in Bitcoin in the Asian region has grown by 27% on rumors alone of gold sanctions. And what will happen if they actually come into force? Gold prices will skyrocket, the dollar will drop, and the US stock market could face record capital outflows. In such a situation, neither Trump nor his administration will be able to explain to Americans why the symbol of national stability, gold, ended up in the hands of a geopolitical rival. The political consequences are no less dramatic. In Congress, voices are already saying the administration has placed the country under attack. Democrats accuse Trump of turning his America First policy into a reality where allies are turning away from the US. Republicans are demanding immediate countermeasures. But it is clear that America has fewer levers than China. Washington has grown too accustomed to dictating terms, but now it finds itself in a defensive position. And for Beijing, this is a chance to cement its status as a new global center of power. And most importantly, this is only the beginning of a much larger war. Today it is about gold, tomorrow it will be about oil and gas, the day after about technology and digital currencies. The world is entering an era in which the economy becomes a weapon no less powerful than armies and missiles. And if the United States fails to find a way to respond, it risks losing what it has always considered its greatest advantage: trust. Without it, the dollar is nothing more than paper and gold in the hands of China.